What up, my devil? Sensei Tutum here with another video for you. So, looks like I've been tasked with carrying the mantle of Bitcoin Friday this week, which is pretty cool. I'm good with that. And I'm not exactly sure where Sam is at with you guys. I don't sort of keep up with his constant updates to you guys weekly. But you guys haven't seen my perspective for a while, so I figure I'll just zoom it out a bit and talk about it a little bit more broadly. And not only do I want to do it that way, it's because if you get in tight, there's a lot of uncertainty, and I hate to say it, there's actually uncertainty at every level. But I think that this is a good moment, depending on where you're at in your count, and this is sort of a pivotal time, that it might be useful for your lower degree ideas if we zoom out and look at the higher degree, see the forest through the trees kind of thing, right? So let's take a look and do that. And also, it's always nice to remember that Elliott always said that from an Elliott perspective, if the degree of focus isn't clear, then zoom in or out for greater focus, better where the count becomes more evident. And that's paraphrasing to be honest, but that's roughly what he said. It's basically, if you're down on the 5 minute and you can't tell what's going on, zoom out to the hour, see if you can't figure it out. If you're on the hour and you can't figure it out, zoom into the 5. Because all you're trying to do is, with Elliott Wave, is usually find trades and clarity. So I hate to tell you, there's not great clarity on this degree either, but there's pretty much two clear options, which is nice. It's either this or that, it seems, right? Can always be something that you don't see. And that's one thing that we'd like to do here at Trade Devils is we're going to shoot it to you straight. We're going to give you the analysis, and there's always more than one option. No form of analysis is going to come up with 100% probability that X happens. Now, if you're on crypto Twitter, if you listen to some other YouTube channels, you might see that sort of thing. And I think that's just the way that guys get on the desk and pound their fist. And when they're right, they just get louder. And when they're wrong, they just quietly pretend it never happened. But, here we're going to give you the full perspective. So what I want to do is briefly talk about the Elliott implications and what the two options are. But we also do a lot of, we teach what we call the pillars of our teaching foundation are, simple market geometry, mainly pitchforks, algos, and Elliott Wave, right? And of course, horizontal support and resistance, which is mixed in there. I would call that a pillar. Those are all, depending on the situation, they can all add clarity or be more clear than, one thing could, like, you might have very clear algo activity, very clear algo chain reactions and extensions that, give you high confidence in, the next trade. But you might have 6 algos on one side, 6 algos on the other, and you can't tell which is which. And but you might have a very clear Elliott count. So it's always nice to have these supporting analysis techniques that help you find confluence. And by confluence, you mean, when you get all of them agreeing, then you can, kind of ramp up your confidence in what you're doing. And then depending on you trade that accordingly. So without further ado, let's jump into the chart. Basically, there's two options off the low. And, this is... This is not a clear, clean impulse, right? But thus far, we have, just being objective, never subjective, we have 5 swings, right? Now, what are the options with that? This clearly is not what I would call a very clean impulse. So what are the options? It could be a finished 5 wave. And we're getting sort of to the point where it's almost getting to be external to be, to continue on, to extend. So we're not going to get like any sort of extensions within, because of clearly an impulse is 5 swings or a motive wave is 5 swings, but it can extend. And if it extends, you just add 4, 5 to 9 to et cetera, et cetera, et cetera. Now, the other option is that this is still an unfinished move, and we were going to get 5, 6, 7 swings. Talking about extensions, a correction is 3 waves, right? And it can extend as well. And if it extends, you just add 4, just like on the impulse or a motive wave. So 3 plus 4 is 7. So the other option is that we could be going up for 7. And I'll be honest, to this point was my primary. And that's just because of the ideal shape of the impulse was not obtained here, right? We didn't have an extended wave, which you generally have. We have three similar size waves, which is more zigzaggy than impulsy. Good words there, right? So it's, it was always at this point where we would find where, this was a big juncture for me. And we still are within that juncture, because you will find out, is this 5 or is this 7, right? 5 or 7. And we still haven't determined that. Once we saw this drop, I was thinking, oh man, it's more likely now that this is 5 waves. And I was telling guys in the Discord that, I was expecting sort of a 50% retracement of this wave here, and then we'd go up, and without talking about necessarily the broader context. When I saw this different drop, and I said that this was possible at the time, they would be more bullish. It's kind of funny that a much more bearish drop is more bullish in the long run, and it would have been. Because at the time, this would be more ideal of the start of an impulse. 1, 2, 3, and then you go 4, 5, as opposed to this shape, right? But just like this could be an impulse, this can, and it appears that it was a zigzag. We now have overlap. It's not a zigzag. Or it's not an impulse. This is, in fact, a zigzag. Now, you can get in or a zigzag or a corrective. Let's call it a corrective. You can get in here and count it any type of way you want. I'll let you guys do that. Leave it up to your determination, but thus far, 3 waves, 3 swings. Now, what are the options from this point forward? Well, we could continue on for that 7th swing. We could continue sideways in a corrective and then go up for the 7th swing still. And then at that point, once the 7th swing is finished, I'll show you guys what that would be. Or we could continue to come down and correct and put in what would, appear to be a 2 wave, a 2 or a B. Let's call it 2 or B. Something like this. This would form an adequate retracement of this move since March. So those are the options. We do not form an adequate retracement. We continue to go up. To me, that is a not bullish sign, because I don't think that we would be forming an extension, right, off of this. Could happen, can always happen, but I very much doubt that would be the case. To me, that would mean that we are finishing a corrective move to the upside. And when that happens, we will then impulse down and retest the lows of March, which, I've been saying about equities, depending on the one you're looking at, I think we will retest the lows of March. I'm not so sure on the NQ, but we won't get into that now. Let's just zoom out and look at the perspective that I'm talking about. Sip of the coffee there. It's going to be a long one, guys, and I'm not going to re-record it. I just want to fit it all in. You don't get my Bitcoin thoughts very often, so saddle up. Because we're going to talk about non-Elliott here soon. This is just an intro and brief Elliott discussion. So the options were that this is a clear impulse. I see so many people trying to force a 3-wave on this. Until this is invalid, and this is the way I work with Elliott, there's no subjectivity the way that I practice, because I know all of the rules and guidelines. Many people say that Elliott is subjective. That's because they don't know the rules and guidelines. If you stay within the Elliott Wave International rules and guidelines, there's very little subjectivity. And subjectivity is really just pushed by ignorance. Anyway, people try to force 3. This is a clear impulse, and I will not move from that fact until we break this low, right? And so this to me is 5 waves. Now this to me is 3 swings. I won't get into the count there, but 3 swings, right? So if we finish 3 swings up, it could be a W, X, and then Y to put a 3-wave down, or it could be a 3, 3, and then a 5 for flat. Both options clearly on the table. And what do we expect when that happens? That you expect the C or the Y to be similar in magnitude and price to the first wave, the W or the A. So a 1-to-1. And again, if this is a 7 swing, by the way, we would actually be going up higher, because it would also need to be at least form a 90% net retracement, which, shocker, haven't done yet. So this is unresolved if it is a corrective move. So again, not getting external here and going up again, to me, is bearish, because we got close to the 90, 887, good enough, but we did not quite make it. So I think that if we go up, and we might even create a new high relative to this, break to the 14K and reject potentially, something like that. So yeah, 7th swing, similar magnitude, something like that. Test the lows of March. Whether we come down to here, 7K or 2K, or well, we could come to 2K. No, we couldn't. As long as we don't break this 3098. So whether we come to 3,500, 4K, or even 6,600, possible. But that's just not on the table yet. This is not on the table yet. If this were to happen, I see new highs relative to this before this, right? So this is not yet on the table. Don't worry about that from a more of a macro perspective. You need this high before you can do that. If this is not the case, and we are going to form a adequate retracement of this, then we are going to come down probably, what do you think? What's the high probability area? 50 to 618. Let me see, get this off here. 50 to 618. Now, there's a lot more that goes into finding your confluence for that, but this is not a bad area. Let's just say something like this, could very well be. And, that would be the bull. The more bearish it is in the near term, the more bullish it is in the long term. So then either way, once that is finished, and honestly, with the bear, if this is bearish, then, or if we go up, create a high and then go low, to me, that's even longer term, more bearish, because I would think that this is A, B, C, whereas opposed to this could still be a 1, 2, 1, 2 potentially. But that's a talk for a different day. What other confluences and things can we look at that make us think that this will go up or down? Let's jump over to another chart. Okay, so what are the pillars of things we use? Algos, simple market geometry, things like that. Sam talks a lot about algos, I'm pretty sure. A lot about Elliott, of course. We all do. But I don't think we pay enough attention to geometry. And my favorite tool is the pitchfork. It's powerful. Let's see, get this objects tree. It's powerful. It is applied in a standard specific way based on the way Alan Andrews taught. A lot of people like to throw geometry tools out there and just kind of place them subjectively. And as I don't like subjective. It's not the way I operate. I want rules. So there's a little more intricacy to it, but simply you place it on 3 of the most recent swings. So we would say maybe this swing, this swing, this swing, 3 swings. And then, we had this before this even went in. We've had charts with this posted, but boom. And I don't like to use personally. I almost always exclusively focus on the original pitchfork. The only time that I'll switch is on a larger size fork to find it sort of follow like a trend. And they have to be real good for me to care about them. Real good. Very rarely will you see me use a non-standard fork, but I've got one in this video for you. So what do we see here? I love forks that generally will show respect of the median line before it's you even draw the pivots, which we don't get here. Our next one will, but this clearly is an important fork. We see these levels are simply the 50 is not a true fib, but simply Fibonacci numbers. We've got the 50, the 382, the 618, 786. So we clearly have respect of these numbers going on. Put a 236 on here. There we go. Let's change this to a green. No, go yellow. So clearly we have respect of these numbers, but can we make any determination on them? We see that we've obviously found support on this 236 as well as this 200 MA, simple moving average on the 12-hour chart. But can we make any determination other than, we're testing this 50, the 382. What happens next? I'm not sure that we can make any determination from this, but let's add another layer, a larger fork. And the longer you get a line, a geometry line on a chart that is respected by the market, the more important it becomes. So going out and zooming out and finding larger and larger geometry is never a bad thing. Again, now this is one of these forks where the median is respected long before you ever draw the pivots. You see this? It's just that you didn't discover this thing until after this pivot went in. So almost touch here, don't make it down to this. So it's very cool. And then obviously on the Fibonacci parallels, the 618, look at that. And that's even, so this I find to be much more important than the previous. So what does this mean? No resistance till this 50, right? Doesn't mean we'll get there. Doesn't mean we won't, but this gives no resistance here. Now, let's consider this potentially. This looks useful, but can we make it any more useful? And this is how I will use things like a shift. And so I'll just check them. I won't switch and say, oh yeah, this is what I want. But when you change to this median line, look at how important this sucker's been. And people think that median lines means that they're like a hard ceiling or a hard floor, and that's not. It means that the market is attracted to. So when it goes above it, it's attracted back down to it. When it goes below it, it's attracted back up to it, and it will move on from them eventually. But this has clearly been a magnet for the market with large swings around it. So when we were talking previously, if it was the bullish option for A, B, C, whatever it may be, then you start adding this on the chart for Confluence. If you pull from the high, so this is a level that will be resistance before you get to your 50, right? If it were the bullish option. Could it end here? Certainly could. I mean, look at the equities. They rarely get to the 50 in a bullish move, right? Often they'll go to 382. Not saying that's going to be the case here. Could be. But this is definitely a level to be interested in. Whether you're looking at it macro or shorter term, this will be an area of support. Not to mention, not even considering geometry for a second, support and resistance. But this will be another tool that can give you an idea of horizontal support and resistance. The VPVR, Sam's talked to you about it many, many times. I won't explain it, but look at this high volume node going right through here as well. Of course, this is the point of control, the main highest volume node, but that's way down here. So you would expect if you're down here that you're well past the high probability area for wave 2, you wouldn't be having the warm and fuzzies that this is going to hold the market and go all the way up. Certainly can fall out of 786 quite often, but this is first and foremost more prevalent because should we come down to here, we should at least see some sort of bounce. This is strong geometry. Now, another tool, like I say, I don't like to use anything that's very subjective quite much. And trend lines are generally fairly subjective, but it's always good to generally have an upward trend line and a downward trend line at the relative degree that you care about on a market. And, you can find your own trend line drawing rules. I won't get into it now, but I've got a down and up here. And what's most important is just to find out how much the market is respecting them. This one's been respected quite a bit. Look at it. So, and then this is your downward. I wouldn't say it's as good as this upward. Now, you can see that price was bouncing between them before they intersected, and that's where we got this giant triangle. And then after that intersection, boom, blast off. Of course, it could have gone the other way, but now we are above. So for now, we'll go ahead and remove the downturn trend line because it's not in the, it's not really in our focus at this point, right? We are still moving in and around this one. But what this could indicate is that if this were to drop, we could get, quite a strong move to the downside. Maybe right into this high spot area. So you could look potentially to play, and this is how I will trade geometry. Shorts of trend lines or breaks of parallels on pitchforks more often, and then play them to go to the next, area of support on that pitchfork or trend line. So if we go back to our big fork, so if we were to drop below this, you could take a breakout trade to the median easily, which is also this high volume node, which is also the 382 fib. And if we go out, let's just go out to the daily and look at where the 200 daily simple moving average is. Very nice. Not to say that this is going to happen. See, a lot of times you'll identify perfect trade opportunities and then just don't happen. This happened earlier this week on NQ. We had two potential 3 Cs, which are the highest quality trades in Elliott. 3s are Cs because, you know, if you're wrong, if you're going for a 3, you still got the C, right? But we had 2 in Q, 3C set up, the potential setting up the other day. The smaller degree one that would get you to the bigger degree one, and it never retraced to the smaller, so the bigger never materialized either. So finding trades is always fun, but the setup, you know, you stock these setups, and sometimes they just don't happen. But so not saying this will break and go to this level, just saying it could. And when it does, it's likely to find some sort of support here if it were to break. Let's see, is there any other? So, and then of course you can start setting in your horizontal support and resistances. You know, I would say you could start drawing here. This video has probably been way too long. Yeah, over 20 minutes at this point. Won't bother you with that. I just wanted to give geometry some love because I don't think we talk about market geometry quite enough, especially the pitchfork. So yeah, I think that you can use this to help your determination. We have 2 clear options. And even at the nearest term, we have multiple options. And I just hope you can use this to supplement your own analysis and decide, are you team bull or team bear? Because, I mean, to me, it's black and white. There's 2 teams, and we're either going to get external to this and cut down and then be super bullish, or we're going to stay internal, make it high, and then low. I think those are by far the 2 highest likely scenarios. So if you think that you've got another more probable scenario than either of those, let me know about it. Post in the comments, at me in the Discord, free Discord. Anybody can at me. All right, guys, that's enough for today. Happy Bitcoin Friday. Toot out.